Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our market research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, guys, it has been a crazy 7 days. It's been 7 days since the tariffs went into effect, and it has really been making the market go up and down like a real roller coaster. And not just in our market, every market is getting smashed. Today we did see some relief, it seemed, as there have been more internal pressure, especially against banks in a lot of different places. But the tariff war has definitely been taking up all the headline space for now. Other interesting things that are going on, though, Circle delayed their IPO, unsurprisingly, based on current market conditions. And then Galaxy, which is, a big investment manager, OTC broker, kind of multi-conglomerate business. They were approved for a NASDAQ listing, and that should be happening sometime soon. But as always, we will talk about some tokens to get started. So first, we're going to talk about Treasure DAO or Magic. So Magic or Treasure DAO was once this really promising gaming publishing platform. They announced yesterday that they're actually going to be performing a round of layoffs and pivoting their business from ZK Sync's Elastic Chain. Sorry, they're going to be, I'm so sorry. I read this line wrong. Okay. They're going to be pivoting to their business from gaming to AI. So they originally launched on Arbitrum. If you're not familiar with the project, they recently moved their whole product to ZK Sync's Elastic Chain late last year. And, kind of according to reports from the project, it's just been making a last-ditch effort to cut costs and stay afloat. According to their recent transparency reports, they said that they were burning about $11 million or $11.3 million per year, but a recent report actually revealed that they're burning closer to $11.4 million just last quarter. And so based on that, the reduction in headcount could buy the project like 10 to 12 months, but the core gaming business is being completely unwound as a result. A lot of us are kind of wondering now, what is the project going to do now to build value? Pivoting AI seems to be like the very popular kind of tagline that everyone's using, but what does that actually mean in the on-chain space? I guess we'll see. So at one point, the project had about $74 million in treasury value. That was in mid-2023. But the combination of declining asset prices and declining interest in gaming has really hurt the project thus far. The token of Magic is down 27% this week. All right, next we're going to talk about Ripple. They had a pretty big announcement yesterday. The cross-border payment network basically made headlines by announcing that they are making that they are acquiring Hidden Road, which is a crypto prime broker deal. Crypto prime broker. The deal is supposedly worth 1.25 billion, and the acquisition is going to mark one of the largest in crypto history, and definitely the largest that Ripple has undertaken. So according to the statement from CEO Brad Garlinghouse, the acquisition is designed to further Ripple's reach and create the largest non-bank prime brokerage business. If you haven't been paying too much attention to Ripple, they also on the business side have been talking about launching their stablecoin. I believe it's called RUSD, but that's been, in the works for quite a while. So buying a crypto prime broker that would run a lot of business through it makes a lot of sense here for them. Separately, though, a 2x levered XRP ETF went live yesterday for trading on the NYSE. So the vehicle was actually approved, and it strangely precedes a regular spot XRP ETF, which has not yet been approved by regulators. So Ripple's definitely enjoying some time in the limelight in terms of this acquisition. It has gotten quite a bit of buzz, but with that, the token is down 6% for the week. Okay, last up, we're going to talk about PancakeSwap. So PancakeSwap is the leading DEX on BNB chain, which is the chain created by the exchange Binance. So PancakeSwap released a Tokenomics 3.0 proposal this past week. And the goal for them is they really want to reduce their overall circulating supply by about 20% in the next 5 years, aka 4% every 5 years or every year. So they plan to do this by eliminating a couple features of their existing model. So they're getting rid of what's called VE Cake Engage voting system, which is just the idea that like users can lock up their tokens in a vote escrow account in a vote escrow contract, which essentially locks them up for a predetermined amount of time. You really can't unlock them, but the longer you lock, the more rewards you get. And so the idea is that you bring more of those tokens out of circulation. So the idea though is like they want to create a more straightforward emissions model. And then they said that immediately all tokens will be unlocked and unstaked, no penalties. So previously, also revenue was shared with cake stakers, and this revenue is now actually going to be redirected toward a buyback and burn program for cake, which could have much bigger effects than a simple staking program. Finally, the daily cake emissions is going to be reduced by half, almost half, from around 40,000 tokens per day to 22,500 tokens. So for PancakeSwap, this is interesting to see them continue to adjust their token issuance program, because back when they came to market in 2021, they came with like an infinite token supply and an uncapped amount of emissions. And they were like, we're just going to give out tokens forever. And that seems like a good idea early on when there were like no tokens. But now that there are so many on the market, it is a very crowded market as DEXs are. It's hard to differentiate and make yourself known in this space. The market clearly liked something. Cake is up 1.8% for the week. All right, that's all I got for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.